Company in Canada, Club Med in France, and a giant movie theater chain here in the United States. Just 3 of the foreign businesses that deal-hungry Chinese companies have been snapping up. But as CCTV's Martina Fuchs reports, going global is not always easy.
Going out or staying home? That's a question many Chinese businesses have been asking themselves recently. The initial investment surge was led by state-owned enterprises and focused largely on natural resources. But privately owned businesses are now becoming increasingly active in cross-border activities and deals.
Since about 2009, 2010, with the emergence of private companies investing globally, we've seen a much more diverse base of sectors in which these companies are investing. So that includes technology, it includes F&B or food and beverage. So really, I mean, it's an encouraging sign that Chinese outbound investment is becoming more broad-based and more diverse.
The buying spree peaked with CNOOC's $15.1 billion takeover of Canada's Nexen in 2012. The energy giant takeover was the largest ever outbound acquisition by a Chinese firm. Rather than pursuing natural resources deals, Chinese companies like Lenovo, Dalian Wanda Group or Fosun are now pursuing everything from computer servers to movie theaters and brand names like Club Med. The Ministry of Commerce says China's outbound investment by non-financial firms hit $89.8 billion in the first 11 months of last year. One player that has significantly broadened its overseas portfolio in the past year is China's telecom equipment maker, ZTE. The company has launched several big-name marketing efforts and is the official smartphone sponsor of the NBA's New York Knicks and Houston Rockets. But with the big overseas push, there inevitably will be many bumps along the way.
You've got volatility in sub-Saharan Africa, you've got uncertainty and the threat of deflation in the Eurozone. So Chinese companies are always looking for opportunities, but it's a little bit more challenging in today's landscape.
The government said in December that it will simplify currency rules and increase credit support for Chinese companies investing overseas. The move also aims at slowing down the rapid buildup of foreign exchange reserves and help local companies become more competitive internationally. Martina Fuchs, CCTV News, Beijing.